So much happened in the market this week. You had anemic GDP numbers, Christine Lagarde potentially stepping down from the ECB, major concerns about private credit, the buildup in Iran, and of course, the Supreme Court decision on tariffs. So let's break it all down. Number one, fourth quarter GDP numbers came in up 1.4% from the same period in 2024, well below economists' 2.5% estimate. Why is this? Well, the Commerce Department, which calculates the GDP figure, estimated that the government shutdown subtracted 1% from the growth figure, though it is hard to quantify. The Commerce Department also said that consumer spending grew more slowly in the quarter. For the full year, GDP grew at 2.2% versus 2.8% in 2024. 2.2% is moderate to slightly below average. I think the real takeaway is that the government shutdown was so long and so disruptive to data collection that we still don't have a good picture of how the economy is doing. How can you make policy when you don't have good data? Number two, rumors are surfacing that Christine Lagarde, chair of the European Central Bank, will leave her position before her tenure is up in 2027. Christine Lagarde is one of the most powerful people in Europe and certainly its most important central banker. So why would she leave her position before her term is up? Well, it has everything to do with the French presidential election next year. French President Emmanuel Macron cannot run for a third term, and currently right-wing candidates Marine Le Pen and Jordan Bardella are leading in the polls to succeed him. Bardella and Le Pen are both nationalist Eurosceptics who would likely work to weaken pan-European institutions like the ECB. Lagarde resigning before her term is up would give Macron an opportunity to bolster the institution before a potential Le Pen-Bardella win. Word is that Lagarde might take over running the World Economic Forum from Klaus Schwab. Spain's Pablo Hernandez de Cos and the Netherlands' Klaus Knot are seen as her most likely successors at the ECB. Swan! Issue number three, jitters in the private credit market. Let's start off by defining what private credit is. Private credit is business loans from non-bank institutions. We're talking about hedge funds, private equity, asset managers. The market has gotten huge since 2008. It's now over $3 trillion, 10 times what it was in 2010. One of the major firms to capitalize on this growth has been Blue Owl, and this week they restricted investors from withdrawing cash from one of their debt funds. Previously, investors were able to withdraw money on a quarterly basis, but now Blue Owl says that they will make episodic repayments as they sell down assets over the coming quarters and years. Typically, a move like this means more investors want their money back than Blue Owl has cash to satisfy, meaning they would have to sell assets, often at a discount, creating a loss. Investors are wondering if this is a canary in the coal mine for these illiquid debt products where investors are going to be rushing to redeem their money and force a lot of liquidations. Think of it like a run on a bank. There are also concerns that after years of easy credit and low interest rates, that there might be some unqualified borrowers in these lending portfolios. And with a $3 trillion market, that can have huge implications. The investors in these private credit funds are insurance companies, endowments, pensions, often public money. This is an unfolding story and definitely something I am watching very closely. There is so much confusion in the world right now, and markets can really help us understand what's going on. I unpack it all every day. Subscribe for more. Issue 4, oil prices and Iran. Oil was up 5% this week near a 6-month high as the U.S. amasses its largest force in the Middle East since the invasion of Iraq. A major concern is the Strait of Hormuz, the 21-mile waterway in between Iran and the UAE, through which 20% of the world's oil travels. If Iran were to close the strait, oil prices would certainly skyrocket. And they actually temporarily closed it on Tuesday for military exercises, clearly a warning to the US. Donald Trump gave Iran 10 to 15 days to respond, so this is really unfolding day by day. Issue 5, last but not least, Trump's huge Supreme Court defeat on tariffs. The Supreme Court ruled that the president does not have the power to enact tariffs, and Trump responded in a characteristically Trumpian way, calling the decision anti-American and the justices fools. He then implemented a global 10% tariff, which he promptly raised to 15%. He did this under a new legal justification, the 1974 Trade Act, which allows the president to implement up to 15% tariffs for up to 150 days, at which point it goes to Congress for ratification. I've had some commenters say that Trump will prevail with tariffs under new legal justification, but I am very skeptical of that. Even with this new law, it will revert to Congress, where he will be defeated. There are certain to be other legal challenges of these laws. It is a very, very uphill battle for Trump's signature policy. The real question is, what happens to the $130 billion in tariffs that have already been collected? Will that money have to be returned? That decision will likely come from a lower court, and we don't have a timeline on that yet. This week I'm watching Nvidia earnings, some more news on tariffs, and hopefully a de-escalation in Iran. Subscribe to Robbie World for that and more.